We've been working quite some time on getting all the stakeholders aligned in Vietnam and across the world, actually, fix or help fix a big problem that the world has largely forgotten. And this is Agent Orange contamination in Vietnam. So this is something that happened during the Vietnam War 50, 60 years ago, but it's still an issue today. The simple metaphor of trying to be well positioned to surf the wave and then actually surfing the wave, this is something that a lot of people get wrong. So either they get on the wave way too late and then there's nothing to be done anymore, or they get on the wave way too early and there's not going to be a wave, or they keep on surfing the wave until they crash against the rocks. You need to focus on the right people. So there's a number of things that you do in a venture capital space that make sense, but that are still hard. In our specific situation in emerging markets, you can quadruple or at least multiply the risk factors with a number of things. Just saying that a lived experience is worth quite a bit sometimes.
All right, welcome back everyone to a new episode of Business Unbound. Every week I sit down with exceptional practitioners who share how they think about the most consequential matters in their domain. You get the frameworks, mental models and business instincts that took them decades to build in one conversation. I'm your host, Florian Hoff. Today, I'm joined by Franc Bogovic. Franc is the co-founder and partner at Aquitara Impact Fund, which finances the development of industrial parks in Vietnam and also works on the remediation of contaminated land as well as in the social impact space. Before that, Franc spent years as COO and Vice Chairman at Finance and Invest Brussels, the Brussels regional investment company that backs innovation-driven startups, scale-ups, and SMEs. In today's conversation, Franc and I will explore how he thinks about evaluating opportunities, building businesses, and taking intelligent risks in complex, high-stakes environments. This is Business Unbound. Let's dive in. Franc Bogovic, welcome to Business Unbound.
Hi, Florian. Happy to be here.
Franc, I'm super excited that you're here. But before we get into the heart of what I want to explore with you today, can you just tell our audience members what you are currently focused on and what that involves day to day?
Yeah, absolutely. We've been working quite some time on getting all the stakeholders aligned in Vietnam and across the world, actually, to fix or help fix a big problem that the world has largely forgotten. And this is Agent Orange contamination in Vietnam. So this is something that happened during the Vietnam War 50, 60 years ago, but it's still an issue today. So still today, there's an estimate of in between 100,000 and 1 million hectares that are still at very toxic levels polluted in Vietnam. And next to that, there's still 800,000 victims that are being actively supported by the Vietnamese government, but also by donors in Vietnam. So it's still a big problem. But as it happens, as you see in other conflicts around the world that are happening today or these days, it's quite easy to forget about these kind of things. And so what we do is on the stakeholder management, stakeholder engagement side, we just try to build a lot of support, try to make people remember what happened. And then the real thing that we're focusing on a day-to-day level is try to get everyone aligned on starting to fix the issue. So starting the implementation. And so for us, this is something that started already back in 2021 when we started working on a proof of concept with our technology partner. And so now we have just received a couple of weeks ago the formal approval by the Vietnamese government, which was on live TV, which was quite interesting. And so we're actually ramping up for implementation as we speak.
How did you end up there? I mean, you're an investor, you come from Brussels, you have worked in, I would say, capitalism, pretty much so. And now you're working in Vietnam and you're working, of course, still in investment, but with a social impact focus. How did you end up there?
It's a good question. I think in general, this is not my first rodeo, if you want, in Southeast Asia. So I was also involved in a emerging markets venture fund back in 2018 that did really interesting things in Myanmar, in Mongolia, and also a bit in Vietnam. And so the thing that attracts me to these markets is just the dynamism. How basically when you walk around, you feel like everyone wants to move forward. And how basically everyone in their own particular way is sort of an entrepreneur, which is something that is quite different to I don't want to be negative, but to the mindset that we experience a bit in Western Europe, where sometimes it feels a bit like we overcomplexify things. We see things as having to go really slow. Actual change or large infrastructure works are quite slow as well. And so this just attracts me in these markets. And so if there's a big problem to solve, then I'm happy to try and bite my teeth in it.
And perhaps without getting too much into the precise model of Aquitara. This is an investment fund in the end, and you're trying to attract investment money from investors, and they expect a return. It's obviously no second opinion about it. Great that there is such a massive social impact. How do you actually convince investors this is a good use of their capital?
A good question. It's a really good question, because what we see is that we basically attract two types of investors, if you want to put it really broadly. I mean, there's obviously different shades of gray. But so on the one hand, the entire problem resonates a lot with some impact-oriented investors that just want to see this problem fixed and really value the positive impact that we can create by rolling out our model. And then on the other hand, what you also have is Vietnam as a market, which is basically the reason that this model works. Vietnam is one of the few countries in the world that since the early 2000s has been growing at just under 7% GDP growth per year. The FDI, foreign direct investment, so basically investors coming into Vietnam, has had records every couple of years. So now the record quarter was actually the first quarter of this year. So you see massive amounts of growth capital moving into Vietnam. And so the target that they have for this year is a 10% growth target, which is, when you think about it, coming from Europe, it's completely crazy. But so this is very attractive for a different pool of investors that basically are very bullish on Vietnam, that say Vietnam has been preparing this acceleration growth for many, many years. And we want to be positioned now to capture part of that growth. And so with our model that combines remediation, social impact, and then eco-industrial park development, we kind of are attractive to both. Because even the investors that are there more for monetary terms or for returns in general, they really value the fact that we're trying to do something good.
That is interesting. And just to confirm my understanding that I heard you correctly, where you're earning money, where you're earning returns on your investment, is the industrial park development.
Yeah,
and
right.
From a purely capitalist investment perspective, the remediation activities are basically a cost position. And even after factoring this in, the return that investors get is still attractive enough for them to underwrite this case.
Yeah, absolutely. So we have typical emerging markets above general market returns. So we're hitting really attractive returns, also because of the investment model that we created that tries to recycle capital as soon as it can. So there's various structural elements that we built into our investment model to also to kind of keep it short. If you need to convince investors to come into a fund that's going to be running for 10, 12 years, it's a bit harder when you're talking about an emerging market that basically has 5-year plans. So there's a number of things that we build in that, on the one hand, increase our risk management capabilities, and on the other hand, increase our returns.
This is helpful for context and understanding, and we already started getting into a little bit of a rabbit hole here. So if we take perhaps half a step back, what I want to explore with you today is how, based on your experience, are thinking about evaluating different business opportunities. And you have invested from a regional public balance sheet in Brussels and now through a focused impact fund in Vietnam. When you first look at a new project or a new business or a new opportunity, what are the initial questions that run through your mind before you, let's say, even open a calculator or a spreadsheet?
Okay. Interesting question. So honestly, I know that I have a framework, but I think it kind of differentiates between what kind of opportunities we're looking at. I would say, from a market point of view, what I really try to understand is how stable is that market? How aligned is the market? What's the likelihood that that's something is going to slow down progress in the market? So it's really like market momentum, I would call it, to then see if, to put it differently, a metaphor that I like to use is in a country like Vietnam, but also in Western Europe, basically anywhere, you need to kind of understand how the waves are going. And then if you have an understanding about how the waves are going, then the next question is, how can you position yourself to be ready to surf the wave? And how long can you surf the wave? And so that how do you position yourself and how you can actually start surfing the wave? That's not so much a market, I would say. That's much more team. So can you get together a strong team? Are you going to have a lot of competitors that are going to try and block progress, etc.? So those are like the key things that I kind of try to think about before investing in a startup or investing in our fund, because obviously we're investing quite a bit in our own fund as well as GPs. So those are like the key things which is slightly obvious. But what I do see is that this simple thing, the simple metaphor of trying to be well positioned to surf the wave and then actually surfing the wave, this is something that a lot of people get wrong. So either they get on the wave way too late and then there's nothing to be done anymore, or they get on the wave way too early and there's not going to be a wave, or they keep on surfing the wave until they crash against the rocks. And so this is something that you can only do with good people. So I'm very, very happy with the team with my partners and with the team that we were able to create, but also the extended team. So we work quite a bit with, for example, Belgian diplomacy. We work quite a bit with counterparts in Vietnamese government. We have very strong Vietnamese partners and international partners, such as our technology partner, Hamers Technologies, is an amazing team that really knows how to operate in different jurisdictions. We have for a social impact, we work with the Victims Association of Vietnam, really strong organization. So, and some other partners. So I think what it really comes down to in the end is who are the people that you're going to be spending time with, and can they deliver what they say that they will deliver? I think that's like the core thing that I really try to evaluate, and where you probably also need to learn a bit, because I made my mistakes. Honestly, I made a lot of mistakes in the past, and this is something that where you can try and apply frameworks, etc. But it's really around learned experience, I would say, on how to select, between parentheses, people, how to basically get everyone on the same train or the same bus, and have the bus get going, and then see how far we can get.
So I heard 3 elements that you're considering initially, which is market, which is timing, catching the wave at the right point in time, and which is team. If these 3 elements are aligned, what would you consider next?
Positioning. So this is something that is not an obvious one for many Western investors or Western. So if you're active in emerging markets, contracts and legal agreements are important, but they're less important than the position that you can build for yourself. So how unique is your position? How defensible is your position? How can you create the positive type of dependency so that they actually need you as a team? This is something that is important for any startup anywhere in the world, but many startups or many companies, they just go into a market and they try to build their position by becoming active and by acquiring customers. And that's a valid approach. But in many of the things that I've seen and that I've done, actually you create your position before you launch your business. And so it's really around how do you try to create that situation where the obvious choice or the obvious contender that will win in the competitive landscape is you. And so this is something where I typically spend a lot of time in trying to understand that and try to build that as well. For reference, for this fund, we actually started our position building back in 2020, launched the fund last year. So sometimes it takes quite some time to do that the right way, I think.
I was about to ask you, do you have a concrete example of, solving this positioning problem? And perhaps you can just speak a little bit further about, perhaps in the context of your current fund, how you identified there was a need for this positioning and how you actually went about pursuing it.
Yeah, I can give 2 examples. I can also give a really cool startup example that I like here in Brussels, because that might speak more to potential investors or people. There's in Brussels, there's a really cool startup that has developed a fiber. So if you look at your shirts or your polo or your pants or whatever, they're all attached with fibers. I don't know the exact word in English, but basically to take away a button, it's not an easy thing to do. You need to decompose your entire clothes to be able to recycle them or to be able to do something with them afterwards once they're used. And so this startup has an amazing team. They have an amazing technology that they've also patented. They have their start of operations, everything. So it's really, really, really cool company. Really driven founder as well. But the challenge that they had was how to position themselves in the market. Because on the one hand, you have the big brands that actually have the retail power. On the other hand, you have the big recyclers that actually have the capex, the big installations, etc., and a number of other players. But what was the reality of the market? It was that something like 80 or 90% of all garments in Europe were not being recycled. So they didn't have an incentive to actually do something with it. There's a huge pile of garbage, between brackets, which could be used. And so that's where they wanted to play. And so it was really interesting to see how they were finding their position with the big brands, but also with the big recyclers, but also with for example, the fabricators of these fibers, etc., and how they went from trying to understand who their ideal partner was. And I can tell you that in that process, they kind of missed or mistaked, or however you would put it, who their partner would be a couple of times. And right now, and this is why it's a good example, I think, 2 weeks ago, 3 weeks ago, they announced a big partnership with actually one of the leading manufacturers of these fibers that connect your garments, to license their, if I'm correct, to license their technology and to create scale immediately. And so this kind of positioning, even if you have the legal safeguards, if you have the team in place, if you are able to execute, etc., sometimes in a competitive market, this is quite complicated. And then for our own fund, in something that is as sensitive as Agent Orange for a country, you kind of really need to understand how you're going to position yourself. Because, I mean, I said it in the intro, up to 100,000 hectares still polluted. For reference, that's I'm from Belgium, that's basically almost half of Belgium. It's huge that is still polluted. And next to that, you have 800,000 victims. So there's a very human side to what we're trying to do as well. And so if you get your positioning wrong, then, for example, for us, the worst thing would be that we would be perceived as trying to benefit from misery, to put it really bluntly. And so at that moment, positioning is very important. So from the very beginning, we've been super clear on we want to be part of the solution. We want to work with strong partners, including governments, stakeholders, etc., to actually bring this solution to life. And we want to have a fair balance, an equilibrium between attractive returns so that we can attract capital to fix the issue. But at the same time, we don't want to promise returns that are huge, because if we do that, then we run a real risk of being perceived like we don't want to be perceived. And so this is something that I've had to learn bit by bit in a country like Vietnam, but also in other countries where positioning is super important. And so once you understand how you can position yourself from a value proposition point of view, afterwards you can then also understand, okay, how am I going to position myself with partners, with governments, with everyone to create a situation where everyone just says, this makes sense, let's go for it. And that's typically takes time, and it's not very easy.
Can I ask you, what did you actually do, concretely speaking, to avoid being perceived as benefiting from the misery?
Good question. So in the case of our fund, it was so for example, the social impact side, where we basically donate a means of living, a means of livelihood to Agent Orange victim families. This model, we created it collaboratively with the Victims Association for Agent Orange. So it's really maybe sometimes also being a bit vulnerable, because I can tell you the first conversations with this organization weren't easy. And so you need to go into conversations where you say, listen, guys, this is what we're sort of thinking. We don't know 100% sure. How can we make this happen? And so these conversations, they started, I think, 2 years ago, a year and a half ago, they kind of came to life. And then once we were in agreement on what the model could look like, then our approach was, okay, let's keep on being prudent. Let's try to see if this works, etc. And so we then wanted to start planning bit by bit by bit. But actually, it's that Agent Orange Victims organization that said, okay, no, we agree. When can you launch? And then we said, well, maybe give us a couple of months so that we can get everything lined up, etc. And then basically the chairman of that organization said, how about next week? And then we said, okay, let's go for it. And so sometimes these, I think, again, it comes to the human side of things, that you need to look someone in the eye, you need to be clear on your intentions, and then you need to be really, really clear on what you can deliver and how you're going to deliver it, and then you actually need to deliver. And so this example of the social impacts or the social enterprises, you can apply this to basically everything. You can apply this to even our lawyers. We have amazing lawyers, which are typically an important partner that are forgotten. But without our lawyers, we would not have the structure that we have today. They came up with amazing things. And it's also there because we said, guys, this is what we want to do. It's probably going to take a bit of time. Can we create a partnership on this? And then they said, no. And then afterwards they said, yes, because sometimes it also conflicts with your partner's model. So it really, we applied this to our different service providing partners, if you want. We applied this to the Belgian diplomacy. So we work a lot with the Belgian embassy and Belgian diplomacy because it's a joint effort. It makes everything more streamlined. We applied it to the partners that we're going to be using for the eco-industrial park development. We applied it even to our banking partners in Vietnam. And so you really need to, you need to be clear on what you want to achieve. And then in some cases, the partnership doesn't make sense. And then you let it go. But so lining everyone up has been a very important practical way of implementing that positioning.
How about your personal positioning? I mean, based on what you said, I imagine you have local partners who are possibly Vietnamese, and you went to the victim association, as you said, and you have locals, which I think is super credible, that they want to solve a problem for their own country. But then, forgive my ignorance, but then you come as a Westerner and you said, I want to solve this problem in a different country.
Yeah. Absolutely.
How did you become credible in this situation?
That's a very good question. A little caveat on that one. So I've been active in Vietnam since 2010, 2011. So the first business that we launched was actually in 2010, and then my first end of 2010, and then I started visiting Vietnam as of 2011. So I actually lived in Hanoi as well for a while.
Okay.
But I don't speak Vietnamese. I try to learn Vietnamese, but for some reason it's quite hard for me. I have a hard time understanding the different intonations. So one word can mean something very nice, but also can mean something very insulting. So I've been in interesting situations where I thought I said something, and then actually I said something completely different. So you need to learn to know where your strengths are. So I don't speak Vietnamese. I understand it quite a bit, but I have a hard time speaking it. But so basically the key positioning came from the fact that the technology that has been tested and proven in Vietnam, and it's the only technology that has been tested and proven in Vietnam to do Agent Orange remediation, is Belgian technology. It's a company that's basically in my street by coincidence.
Interesting.
Yeah. And so that's the key point of how we started the entire conversation, that we said, guys, you have a problem. It wasn't possible to fix this problem until now, we think, because this technology has evolved quite a bit over the last 5 to 10 years. It's become much more effective, much more efficient in terms of how much it costs per ton to actually decontaminate the soil, effective when it comes to actually achieving that decontamination at 99 something percent. So that you can actually even do agriculture on it afterwards. So this has been the big achievement, I would say, of the last 5-6 years. So then we went to the Vietnamese government and said, guys, can we do something with this? And obviously they were quite surprised with this message. But what does help is that they have their own units that are working on Agent Orange contamination. So these units were on board immediately. They already knew this company. And so this company, Hamers Technologies, to be really clear, they have a model where they do the engineering and the design, but they don't do all of the operations. So it's a specialized company that is really great, top of their field worldwide, really unknown in the broader business environment, I would say. But in their own sector, they're famous, and so that's where it started. It really started with this company starting a proof of concept, and then us getting on board, helping them, and then us teaming up, because we have done a number of things in Vietnam.
And that makes you certainly credible in this situation. I looked at some Agent Orange pictures before having our conversation, and we had a little bit of a pre-discussion, and it is really horrifying to see, especially as a father. You are a father of 3, I believe. I'm a father, and seeing these pictures of the victims, the young victims, is horrifying. And I think it's great that you found a way to help the country to decontaminate this land.
Yeah, you can do good by doing well, or doing well by doing good. It's something that is at the core of impact investing. And if you want to take a little bit of a step back, that's actually one of the things that I think we should try and change in the narrative around impact investing. Too often, I still see impact investors presenting a message saying that there's a trade-off, that in order to achieve certain returns, you can't achieve a certain amount of impact, or if you want to achieve a certain amount of impact, you need to let go of some returns expectations. If you build your model like we did, and there's many other examples like it, you can actually achieve both. And so I think there's a bit of confusion around the term impact investing. It's gotten a bit of a container word, if you want, where on the one hand, you have things that could be fixed with philanthropy. And then on that philanthropy, there might be a return so that the money can be recycled, so that there's more good that can be achieved. But at the basis, model should not be a model or cannot be a model that provides profits, but it provides more and more impact. It fixes a problem more and more and more and more. And on the other end of the spectrum, you have impact investing can actually achieve both, where you find a way to create a model where you have an amazing impact in a real problem and where you can then actually provide a decent return for your investors. And so this is something that I feel very strongly about, because too many of the world's investors, they need to, when they're managing wealth or they're managing money or what have you, they need to strike that balance. If someone managing funds or managing a family office or what have you, if they are going to achieve below market returns, then their principal or the boss or whoever or the investor is going to say, guys, why don't you invest a little bit better? Because if we just put this money in the market, we can achieve a 7.2 or a 10% return by just investing in an index fund or a tracker, an ETF. And so on the other end of the discussion, these principals, these investors, most of them want to have some kind of impact as well. But so if you have this I wouldn't say agent principal problem. I think that goes too far. But if you have this misalignment of interest, then it becomes difficult to actually get more money into the impact investing space because of this confusion around what could be philanthropy and what could be impact investing. And so what we face, for example, is that many of the funds that we talk to, they have like a small impact investment bucket, 1% or 5% or whatever, 10% in some cases. And then they have a real big bucket that is meant to increase value. Which I understand. I mean, if you have funds or if you're managing money for people that are your investors, then you need to be able to achieve what you promise them. But you can do both. And so, too many times, what we face is that in the bucket of money that they accept might be gone, and so that's an uphill battle. And so, if anything, if a couple of people listening to your podcast get that message, I'm already happy.
Be reasonable to position yourselves potentially as not in the impact investing space, but maybe more in the emerging market space? I mean, you mentioned that you still achieve above market, above average returns with your model, and you do have a social impact. Could it be potentially beneficial not to market yourself as social impact or impact an investment fund, but rather as an emerging market fund?
Yeah, but then, I understand where you're coming from, but then what you do is you need to be clear on what you're doing. And so we want to fix a problem. So for us, we're an impact fund. And so that's a bit probably where the confusion also comes from. We really think and we really feel that we can be part of the solution to fixing the problem. That's why we started this entire thing. We didn't start this entire thing to get rich. We're going to make money as well, just as our investors, by doing this, because you need to create an attractive proposition for your teams, et cetera, et cetera. But so it's a real. So I would say if there's any trade-off in these kind of fields, it's how you actually position yourself. And so we've done that. We've positioned ourselves a bit more as emerging markets investors or investment funds with specific types of investors. But it's still a challenge to pierce through that wall, because in some specific environments, not to call out specific jurisdictions, but in some specific environments, family office is regulated. For example, in most of Europe, family offices are not regulated. Just someone that has a bit of money that then decides to set up a small team to look at specific opportunities. In other markets, they're regulated, so that means that the people working or running the family office to put out that specific or to call out that specific group of investors, they need to staff their family offices with experienced people. And so these experienced people, they do what they have done or know for many years. And that's how to allocate money in investment markets, and not necessarily to do impact investing. So there's multi-layers to this. But why am I calling it out as well? Because what we're going to be seeing now worldwide is this huge transfer of wealth from the previous generation to the new generation. Family offices are going to become much more important in the worldwide investment scene. You can also see that these family offices are taking much more ownership and responsibility. Previously, the go-to approach for many investors was just put your money in a private equity fund, like in our fund. But you see that many of these family offices are becoming much more active as well with in-house teams that are actually doing direct investments. So there's a lot of exciting things happening in this field, and I think it's going to be really interesting times also for impact investing. So I think we're going to see some kind of change in nomenclature in what we actually call what in the coming years. But definitely, it's going to be an exciting time to witness what we see as evolutions.
Your work, I would argue, lives in a space that is full of risks. Back in the days when you're in Brussels, you had early stage companies. Now you have contaminated land in Vietnam, which I'm sure has its own challenges and risks, plus potentially political consideration, regulatory uncertainty, both back in Brussels and also now. When you think about risk, not in a pitch deck or investor type of sense, but when you think for yourself about risk, how do you define it? How do you think about risk?
A good question. So the way that I look at risk is, I don't know if this is a general definition, but it's definitely a definition that I saw at some point, is the probability of an adverse event happening to what you're doing. So when you think about that, there's risk in everything. If I walk into the street right now, I might get hit by a car. What do you do when you cross the street? You look both ways and you don't just run onto the street like a madman. So risk is something that is in our life. It's everywhere, all of the time. There might be a gas line that explodes here in the street where I live right now. So I think the taboo or the difficulty that many people have with risk is that they get an uncomfortable feeling, an emotional response to risk, while actually you just have to accept it. The moment that you accept risk and that you focus not so much on what could happen, but how you could actually mitigate certain risks and how you build your framework on how to minimize potential big adverse effects, not the small ones, because everyone always has issues. Then at least you understand how you can make a model or your life more comfortable and how you can sleep at night. And so for venture capital investing, in the model itself, there's a couple of things that are built in. So you need to have a certain size of portfolio because you know that there's going to be X% of your portfolio that is going to fail. You need to have a certain amount of money that is put up front in the early stages of investment, because if the teams don't have runway anymore, then it's going to fail for sure. You need to focus on the right people. So there's a number of things that you do in a venture capital space that make sense. But that are still hard. Don't think it's that much of a science, maybe a bit more of an art and experience, etc. In our specific situation in emerging markets, you can like quadruple or at least multiply the risk factors with a number of things, because you're going into a market that is where more things happen, where there's more competition, because also harder competition. So what we have built, or why we sleep at night, is the model that we built with our investment fund. So on the one hand, for example, what serves as collateral for the entire fund is the land rights that we achieve for the eco-industrial parks. So that's in a matter of selecting the right land rights and getting an agreement with the Vietnamese government, which we have, to acquire plots of land that are commercially interesting, where you know that if everything goes wrong, that you'd be able to liquidate that plot of land at a cheaper price, but at least at a price where you're going to be able to recoup your investors wholly or partially. Right. So that's one thing. A second thing that we've done is duration. So the way that we built the fund is so it's going to legally, we're going to be a 7-year fund. But what we're going to try and do is do it in 6 years. And so it's 6 years with 4 phases of 1.5 year that follow each other. That are consecutive, that follow each other. And so after every phase, there's a decision point. The decision point is, do we continue, yes or no? Has something materially changed in the market, yes or no? And so that way you kind of limit the potential exposure that you have down the line. Now, do we expect that there's going to be issues? No, because the way that the Vietnamese economy has worked over the past decades is they have their 5-year plan, which was voted now in January, and they're executing their 5-year plan. So you have a typical 5-year horizon where you're able to execute, and that's why we aligned it with our fund timing. So that's another thing that we do. A third thing that we do is that we really try to build strong partners to insulate yourself from potential competitive issues. So there's a number of things on how you can actually build a model that manages risk. And if you're active in an emerging market, then you can't do it any other way. If you just go into that market as a pure commercial player, without any of these kind of things, and then it might be great and you might have an amazing return, but you'll run into typical emerging market frictions very, very quickly, which I did as well 10, 15 years ago, just to be clear. So I'm not saying that that I know better, just saying that a lived experience is worth quite a bit sometimes.
Frank, we have covered quite a lot of ground so far, I believe. And you spoke about the importance of finding the right people and getting the right people on the metaphorical bus, so to speak. Can you explain to our audience members what your, let's say, key learnings are in terms of the people that you want to be in business with and perhaps the types of people that you want to not be in business with?
That's a good question. So a couple of years ago, my background is also in consulting, so high pressure environment with teams that you don't choose. I've been in a couple of startups, and so the one thing that I choose for myself is that it's a very simple thing when you say it, but when you think about it and you look at your own working environment, it might resonate in general, not you, Florian, but in general. So I basically installed for myself a no asshole policy. It's a very simple thing, but when you think about your typical work environment, there's always a couple of these guys or women that are there for the complete wrong reasons. And so the luxury that I have now, that I've had for a couple of years, if you're in a director position, is you can actually do something about that. So some of these things are coachable, some aren't, and then you just need to cut ties very quickly. So I think that's one of the key things. It's not so much about, for me, it's less about skills, it's more about attitude. And then the other thing is that the best working relationships that I've had is with people that are complementary to me. So I've always tried to understand where my strengths are and where my weaknesses are. And I'm quite clear on where my weaknesses are. So I look for people in my partners, but also in our employees that actually complement me, so that as a team, we're better off than just me alone that messes things up. So I think that's something that is more difficult for a lot of people because it's something that I've had to learn. Bit by bit. So I think that's the second element. And then the third element is that beyond attitude and skill sets, it's a certain eagerness, it's a certain hunger that you can identify fairly quickly in people if they really want to go for it or not. So I've been lucky enough that over my entire career, I've never really worked with people that aren't incentivized by the goal that we're trying to achieve. So there's really little situations where someone has said at 5 p.m., I'm off by. Of course, if you have children, etc., that changes the situation a bit because you need to rebalance family life and etc. But so those kind of elements around attitude, around drive, hunger, eagerness, I think if you combine that with a clear goal, what you're trying to achieve together, then you can get really far. So that's how I look at people. And I've worked with people from all cultures, from all backgrounds, from different ages. There's no real golden recipe, I think, but you just need to get a couple of the basics right, and then you can see where you get.
Frank, in the interest of time, let's start wrapping up our conversation for today. And we have a closing tradition on this podcast. And I want to ask you, if you think more broadly, is there someone or something that is inspiring you right now, like a particular leader, a book, an idea, anything else that gives you energy and that you want to share with our audience?
Good question. So you might see it or you might not see it. There's tons of books behind me. So one book that I really like, it's not a simple book, but it's this one. By coincidence, I'm just reading. Oh yeah, you see it the other way around. It's Bill Gurley. So Bill Gurley is one of the mythical VC investors that was the first investor in Uber and a number of other ones. So this is a super interesting guy that I first read about in, is that book here as well? Yeah, it is. So it's by coincidence, it's my book stack. Sorry. Sorry, everything fell there. So yeah, it's a book called The Power Law by Sebastian Mallaby, which is super cool stories on all of the backstories of some of the major superscalers, hyperscalers, etc. that we know today. And this Bill Gurley guy, he's actually one of the guys that is in that book. And I think it's super interesting to see how, as a VC investor, this guy, but also the other people in the book, etc., have been able to really try and balance really strong scaling with a really focused mission and value creation, and also really changing the world at the end of the day. That's, I would say, a couple of books that I really like, and and people that are super interesting. And then another thing that I think everyone should read is I recently saw a speech of this guy. I haven't read this book yet, but it's called Breakneck by Dan Wang. And so this is Chinese guy that is living in the States, and it's really around China. It was considered one of the best books of last year, I think. And so it really makes you understand how China developed to where they are today over the past years and decades, and how it might continue to evolve. I'm not saying this because I'm the biggest China fan. I mean, I'm still European, but it's something that we need to be mindful of and that we need to understand, because they are getting a couple of things right that in Europe we're lacking. So yeah, there's a couple of these things that I think are mega shifts and mega trends that you need to understand, and then you don't need to understand the hyped Instagram posts, etc., which are also cool to look at, but you need to dig a level deeper and try to understand what actually made it happen.
Frank, and then final question, in one sentence, perhaps.
Oh, wow.
If our audience members remember just one thing from our conversation, one insight, one way of thinking differently, or one action that they should take, what would you want that to be?
Good question. I would say it's worth your while to work on a big problem. Because if you find a big problem, you typically can get all things lined up to try and fix it. And it's just cool to try and fix problems in the world, So I would really say that. Find a big problem and try to work on it. It's worth your while.
It's really powerful.
We try to do our bit.
Well, then, Franc Bogovic, thank you for coming on Business Unbound and for this conversation.
Thank you very much.